Welcome to the Real News Extra. My name is Fred. I'm the Operations Manager at Relaw APC. And joining me today is the Principal and Founder of Relaw APC, Jennifer Felten.
Hello, everybody.
So Jennifer, tell me a little bit, what is this 1099 AD form and why do you think it's a significant development for crypto investors?
Yes, so 1099s from an IRS standpoint are to notify the IRS of taxable events. They do not generate taxes in and of themselves. They just are notices relative to a taxable event. So for example, for the sale of real estate, you get what's called a 1099-S, right? So it's a specific 1099 form that says, I sold a piece of property and this is the amount of money that I received. Just because you got, say you sold a house for $1 million and so that 1099-S says $1 million, it doesn't mean you're going to be taxed on $1 million. It's just notifying the IRS of a taxable event. So this new 1099 form is to notify the IRS of taxable events relative to cryptocurrency. So crypto has been this kind of burgeoning industry, and so figuring out from an IRS standpoint how to manage it, regulate it, tax it,
right,
has been a challenge. And so this is the next phase of their attempts to regulate and tax the crypto industry.
So in your opinion, how does the introduction of this 1099 DA form reflect the IRS's broader approach to actually regulating the cryptocurrency market?
Right. So they have been working on trying to figure out how to do this in an unregulated market, right? The markets that they're used to dealing with, real estate is a regulated market. The stock market is a regulated market. But when you're in this new world, unregulated, how do you build a system? So up until now, all of their attempts have all been designed to create notices at the exchange level. So the exchange is where crypto is going back and forth. But the new rules broaden the scope of who has to report in order to get it beyond just the exchanges. So on a real estate transaction, if there's crypto involved, that would now generate reporting. So a broader group of people are now going to have reporting requirements. The idea being trying to find every potential opportunity to regulate and tax crypto.
So what role do you see professional tax advice in the crypto space? And now that the 1099 DA is in effect, how does an investor approach finding the right expert to help them?
Well, you definitely need help. A lot of the initial development of crypto, part of why people liked it was it wasn't regulated and it wasn't taxed. Right. Well, that's gone. So now you do have to report, and if you don't keep good records and accurate information, because the new 1099 form you have to put on it what you bought the crypto for and what you sold it for. If you don't have those records from the time of acquisition, you could underreport or overreport and have significant tax consequences for that. So I would guess that most CPAs are not crypto experts. So finding a CPA or an attorney who understands the space and knows what needs to be done, finding the right financial planners to plan in the crypto space, all of those are going to be valuable resources in this new market, even in, again, a real estate world. Making sure that if crypto is somehow involved in your real estate, which it can be, that it's being done in a way that's going to be safe and properly monitored for tax mitigation purposes.
Right. If you're enjoying this episode of the Real News Extra, I ask that you please click like or subscribe, hit that little bell for notifications, and we'd love to hear from you. Please leave a comment on this video. My name is Fred. I thank you for watching the Real News Extra and look forward to seeing you on the next episode.